What's up everyone? So in this video, I'm going to be talking about understanding fractal OXXC and PO3, as well as talking about identifying true manipulation to dictate our next objective because PO3 is irrelevant without context, such as manipulating into key levels. So to start things off, I'm just going to be talking about the basics of our OXXC, or our open low high close, or our open high low close. So to start things off here, you can see that this example is right here. So for a bullish candle, this is going to be fractal. This happens on the 1 minute all the way up to whatever, our yearly candle. So if we have a bullish candle, how is this going to form? We're going to open, we're going to manipulate lower into a high time frame PDA, where we will then get some sort of entry model to target our buy side DOL, where we will then retrace and close. For our bearish candle, this is what's going to happen is we are going to open, we are going to manipulate higher into a high time frame PDA, where we will then get a entry model to target our sell side DOL, and then price will retrace and close. Now, another thing that I want to emphasize throughout here is that we have a time and a price discount or premium. So you can see that we have our opening price of our candle. So any prices below is going to be discount of time, and any prices above is going to be a time premium. So this is something that we need to incorporate within our trading to just align more confluences, because if price is in a time and price discount, then that is very optimal to be looking for a long position. Now for the first example, it's very easy to talk about that concept on a obvious diagram as shown in the previous example, but I wanted to hop on some real chart examples to show you what this looks like in live time. So you can see that right here, this is going to be our market open. So what ends up happening is we open, we put in a bottom and a top wick. So at this point in time, how do we know where price wants to distribute towards? This is exactly what I was talking about when I talked about how we need to identify our true manipulation, because it's going to be obvious to dictate what our true manipulation is by understanding if price manipulated into a high time frame PDA. So in this case, you can see that price opens, we manipulate higher into a 1 hour bearish fair value gap, where we sweep internal buy side liquidity and we put in a bearish SMT. Now you can see that we have a ton of low resistance liquidity below on the lower time frame as well as on the higher time frame. So I want to be catching distribution lower at this point in time to sweep all of our draws on liquidity below. Now, if we go back to this time frame, you can see that on the 4 minutes, after we see and identify our true manipulation and we have draws on liquidity below, what do I want to be looking for? I want to be looking for an entry model that's going to take me to my draws on liquidity below, which in this case is this form of our 4 minute IFVG. So right when we get a candle closure below, we can be looking to take an entry here and target our draws on liquidity below and catch our distribution lower, where we end up sweeping all of this sell side liquidity. Now for the next example, I'm going to be talking about how we can use PO3 to save us from unnecessary losses or low probability setups. So if we look at this example on the higher time frame, we can see that price is very bullish. We have draws on liquidity above, such as these relative equal highs up here, as well as these London highs. So what do I want to see? I want to see continuation into a high time frame PDA below to then catch distribution higher. Now if we go to the 15-minute time frame here, what are we looking at? Well, you can see that this is our 15-minute candle here. We are inside of a 5-minute bullish fair value gap if we look on the 5-minute time frame, which we would want to see be used to take prices higher. But now if we go back and take a look at our 15-minute time frame, you can see that right when we get our entry model, what do we see? We can see that our 15-minute PO3 has not put in a bottom wick or manipulated lower, and we anticipate all candles to put in a bottom and a top wick. So if you take this entry model to target and take a long here, you are pretty much asking to be the manipulation here prior to catching distribution higher. Now what actually happens here, you can see that price ends up once again immediately stopping this position out, where we manipulate lower, put in a bottom wick, where we have now manipulated into a high time frame PDA as we've swept internal sell side liquidity inside of a high time frame PDA, and we have draws on liquidity above. So what happens is we put in that manipulation, and then we start getting expansion higher, where we then sweep all of our DOLs above. Now for the next example, I'm going to be talking about incorporating stacked PO3s to catch the highest probability trades. So first of all, taking a look at this chart on the higher time frame, what can we notice? We can notice that we have just created a 4-hour bullish unmitigated fair value gap. So this is going to be a form of some very low resistance liquidity that we want to be targeting, even if price is overall bullish. Now going down to the lower time frames here, what can we see? So initially, right at open, what ends up happening? Well, we actually end up manipulating lower into a high time frame PDA, which ends up bringing us higher. So you can see that on the 15-minute time frame here, we have a unmitigated 15-minute bullish fair value gap. So what ends up happening here is price ends up opening, putting in a low wick where we manipulate into a high time frame PDA below, and then we see expansion higher where we then end up sweeping internal buy-side liquidity. Now, what time is this that we end up sweeping internal buy-side liquidity inside of a high time frame PDA? This is right when our 945 PO3 starts, right? You can see that right here is our 15-minute candle PO3, where price manipulates higher. We put in a internal bearish SMT. We have swept internal buy-side liquidity, and we are delivering from a 30-minute BPR or a high time frame PDA. So we've manipulated higher, and now we expect distribution lower to our draws on liquidity, right? So you can see that price actually ends up simply accumulating here. We do end up taking this DOL, and now we will go to 10 a.m. right here. So this is going to be our 10 a.m. So now what I want to emphasize here is that our PO3 on the lower time frame, such as the 15-minute and 30-minute, are telling us to be looking for prices lower as we've manipulated higher into a high time frame PDA. So now let's take a look at our higher time frame PO3. If we go to our 1 hour PO3 here, what are we looking at? You can see that 10 a.m. has just occurred right here. So what happens? You can see that we form our new PO3 on the 1 hour time frame. What ends up happening, right? So right here, the 15-minute time frame or 15-minute PO3 is telling us to be looking for shorts to target this 4-hour unmitigated fair value gap below. Now, this is where our 10 a.m. candle opens. So what do I want to see? I want to see manipulation into some sort of higher time frame PDA to then target our DOL. You can see that price ends up accumulating here for quite a while until we finally put in a obvious manipulation leg higher. Why is this a manipulation leg? You can see on NQ we haven't manipulated into any form of high time frame PDA, but if we take a look at ES here, you can see that ES has put in a bearish SMT as it swept this internal buy-side liquidity. So that's what's going to make this the true manipulation as opposed to this. This manipulation doesn't matter because all it's really doing is a couple things. You can see that we are really just adding to this accumulation zone prior to seeing our actual manipulation higher, which we do here. So now that price has manipulated higher, this is our 1 hour PO3, also aligned with our other PO3s, such as our 30-minute PO3. This is where our 30-minute PO3 started right here. So now if we take a look at our 30-minute PO3 at this point in time, you can see that we're looking at the same exact thing, and it's all telling us the same exact narrative. This is where our 30-minute candle opens. What ends up happening? We manipulate into a high time frame PDA, and we have draws on liquidity below, where I would then be looking to catch expansion lower. So now we have our 15-minute, our 30-minute, and our 1 hour PO3s all aligned, telling us the same narrative. Now you can see that we end up getting a 2-minute inversion to target our DOL below, which ends up delivering to our full take profit. Now for this last example, this is going to be talking about how it's very important to utilize and understand our true manipulation to avoid low probability trades. So we can see that right here, it is 9:29, so we are just about to form our next 30-minute PO3. So what happens at 9:30? We end up opening, we manipulate lower, where we sweep internal sell side liquidity, and you could say that we have liquidity above. But is that really the case here? Not really. We have a high resistance target above. Do I really want to be targeting this high inside of a higher time frame bearish PDA? Not really. What else do we have? A ton of generated low resistance liquidity below on the higher time frame. You can see that we have this sell side liquidity, this sell side liquidity, this sell side liquidity, this sell side liquidity, and all of this generated liquidity above here. So this is why we need to align our PO3 with our overall narrative to avoid low probability trades. So what ends up happening here? We open, we sweep internal sell side liquidity, and then we get a 1-minute inversion. I saw a lot of people took this trade. Why did I avoid it? Because it wasn't aligned with our narrative. But what ends up actually happening here? This is what's very important. This is not our manipulation. You can see that we end up manipulating this internal buy side liquidity. We are not delivering from any high time frame PDA, and my bias is overall bearish here. But now what ends up happening? If we take a look at the 5-minute time frame, you can see that price ends up manipulating into this 5-minute high time frame PDA, where we also sweep our internal buy side liquidity here. So now this is our PO3 aligned with my actual narrative. So I would want to see this be the true manipulation to then catch expansion and distribution lower to all of our draws on liquidity. What ends up happening here, we end up getting a 1 minute inversion where you could end up taking this position to catch our distribution lower. Here's the close right here. This is the close. So we can take this position targeting all of our low resistance below. And this is going to be aligned with our higher time frame narrative as well as our PO3. Because as you can see, this wick, not this wick is where we manipulate into a high time frame PDA, where we also sweep internal buy-side liquidity. So this is our true manipulation. This is our manipulation that actually matters here. Now what ends up happening here? Price ends up distributing lower to our draw on liquidity. Now you can see what ends up happening here. We have not reached our full take profit yet, but what are we doing? We're creating high time frame PDAs. And at this point in time, this is where our new 15-minute PO3 occurs, right? We'll go ahead and change our candle to our 15-minute time frame so you can look at our 15-minute time frame PO3. So what ends up happening here? Well, our 15-minute PO3 ends up opening just right here. Our draw on liquidity is still lower at this point in time, and that's what's really important to understand. So here is our opening. What ends up happening? We manipulate higher into a high time frame PDA. You can see that this is our mitigation block as well as a unmitigated PDA. Now, this is going to be the true manipulation where I would want to continue seeing expansion lower, because you can see that on the 30-minute time frame, this isn't going to close until 10 a.m. So I would want to continue seeing distribution lower on the 30-minute PO3 as well as our new 15-minute PO3. And that's exactly what ends up happening. So I hope you guys enjoyed this video and learned something. I have just a couple examples here, but if you go ahead and backtest this, which is exactly what I recommend doing, I don't want you to take my word for any of this advice. I want you to utilize it into your own trading and see if it makes sense for you. Personally, I've backtested this a lot. All it's done is gave me a lot more confidence in my high probability trades, and it's also saved me from a lot of unnecessary losses. So I hope you guys enjoyed the video. If you have any comments or suggestions, then please leave them in the comment section, and I will talk to you guys next time. If you watch till the end, drop the goat emoji in the comment section. Thanks for watching, everybody, and I'll catch you next time. Have a good one.